2025 is here. Well, welcome back to New Year, my friends. A new year of ups and downs and a lot of opportunities. But today I'm going to answer a very, very important question. A question I think everybody has on their mind, especially after this December dip that we had. Is the market crashing? Is there a correction? Is there a pullback happening? Should I wait? Should I sell everything? What do you do? Well, you definitely don't sell anything. And I think there's two questions on the street. Is number one, is this time for corrections because the market has run up all-time high? Okay, so that represents a 30% increase. Or instead of doing this, we kind of just continue with the green and push higher to new levels. So I'm going to answer first, number one, why the market sold off December. And it's simple. Not everybody's looking at this. The treasury yield. Okay, the treasury yield is literally back to 2023 levels. Okay, this is where we used to be, 4.95 in 2023. We're literally back here. Okay, so we wiped out all of 2024's treasury yield kind of dips. And the treasury yield signals confidence for tech investors and technology investors. So now you have a treasury yield that's pushing up because it kind of signals that yields will, or the interest rates will kind of prolong for more years to come. Like the Feds have said, they're only going to cut twice, 2025. So you notice the yields have gapped up, causing tech to pull back. And that's the reason why tech has sold off. Okay, it's because of the yields going up. Now, this is where it gets confusing because now what you have is a new administration, I'm talking about Trump, of course, that has promised to deregulate certain sectors. And I guess that could signal confidence for investors and even the consumers. And we don't know what's going to happen, guys. We don't know how that's going to affect the economy. All we know is there's something coming. We just don't know what. I think there's certain industries that are going to benefit the most, and you just have to focus on those industries and nothing else. But guys, if you're looking for the answer of why tech sold off or the whole market sold off, especially these young stocks, small caps, mid caps, well, it's all here in the treasury yield, the 10-year treasury yield. I think this is 3 years, but yeah, the 10 years is the same thing. It's the same back to the 2024 levels or 23 levels, which by the way, back then we actually was a bear market, just coming out of a bear market. So it seems like we're still young because what happens when the Fed suddenly decide, hey, let's cut interest and they dip, this thing dips? Well, tech will rally. Okay, tech will rally. And they're going to do that when they notice that the economy is getting weaker. So there's two things happening here, guys. You have number one, there could be a pullback or correction if earnings disappoint in 2025 for technology stocks. Or you have a continuous rally if earnings disappoint and the Fed see the economy is disappointing, then they'll just trigger interest rate cuts faster, causing the market to go up. So I see this as a win-win situation. No matter what happens, if you get a correction, it will be engulfed really quickly by the Federal Reserve's actions. Okay, I mean, and they do take actions outside of what they project, just like they did in 2020 over here, right? They dropped rates instantly within a month, and you know what happened? All-time highs. So there's two things happening here, guys, in this current market condition. All I'm saying is it's time to bet on a horse. You should forget all of this. This is all noise. It's time to bet on a horse because you just simply don't know what's going to happen at this given moment in time in this current market condition. So find your sector that's going to benefit the most from this new administration. Find the sector that's undervalued. And look, guys, if you think the overall market is expensive, let's just look at the Russell 2000, which houses a lot of small caps and mid cap stocks. The Russell 2000, okay? It hasn't actually gapped up. Look, for the whole year, it's only up zero. It's not even a fraction of a percentage. So small cap, mid cap stocks, these things haven't actually rallied as much. Hence why this sector or this specific thing hasn't actually moved. Now the Nasdaq has moved because there was a recovery and there was new industries induced. There was the AI industry pushing the market up. There was the chip industry. Okay, so, do we think the demand is going to slow down? Well, we've been saying the demand was slowing down a long time ago. It's just we haven't seen it. We haven't seen it slow down yet. So, we don't know. Are you betting on that to slow down and you're going to wait on the sideline? You could do that, no problem. The other side of the equation is you get in and the market goes in your favor and you get out. And that's why I said in a couple of videos that you could potentially have both naysayers and the yes-sayers being correct, because you might have a rally first half of 2025 and then a correction or a pullback and then a continuation into 2026. But one thing you have to know, guys, it really doesn't matter if you get a correction this time, because the trajectory is up. You've got 5 years of rallies and you're only in year 1. You're about here. Okay, now imagine you got year 2, year 3, year 4, year 5 of rallies. And we all know how the market works. The market will work by betting on the future. So even if you get a correction, it will still be engulfed really quickly, because the market will start to bet on the future. Okay, and they do that ahead of time, months ahead of time. So if they think 2026 they'll have a lot of interest rate cuts, they will start betting on that by buying in now. And that will probably be buying. The buying will probably be fourth quarter of 2025. And then maybe worst case scenario, you have a correction third quarter of 2025. Okay, so I think the first 6 months of this year, it's clear. A lot of you who are scared, you probably say, well, I'm not going to enter anything. I'm just going to sit on the side. Okay, that's 6 months of sitting on the sideline. You want to do that, do that. But you could literally make a 30% return within 4 weeks, less even, depending on the sector that you pick. There is going to be a lot of day trading opportunities as well because of this volatility. So I might even come back to make strategy tutorials for you guys here on this channel. That's if you want. But guys, the answer here is simple. Market dropped December because of interest, the treasury yield curve going up. Once the yield comes down, this thing will shoot up again. And the Nasdaq I'm talking about. But I think you guys are early. I think you're going to see a lot of good things happening the first 6 months. And then after that, things will get murky. A little bit of murky waters. And just like always, it will be engulfed with another bull rally. And you've got 5 years of that. So strap in, guys, and get ready. It's going to be a fun ride. Pick your horse and bet on it. And no matter what happens short term, the outcome is going to be there. Like a lot of these growth sectors and growth stocks haven't seen their full potential. And that full potential only comes when the stars align fully. And you're talking good earnings, you're talking good interest rates. And all of these young companies will benefit from that. And hence, the growth will be, I think, great. And you've got a pro business administration as well. So a lot of things are just pointing upwards. That's me done, guys. Appreciate you for watching. Peace and love as always. And if you enjoyed this, you know what to do. Bye.